Today we're going to answer the question, do HOAs have to file tax returns? Now, as a CPA who's been practicing for decades, I've been asked this question many different times, and it seems like there's a lot of misinformation out there. The simple answer to this question is yes, they do. HOAs are required to file tax returns under federal law. I think a lot of people believe that HOAs are nonprofits and so they're not required to file. Even though an HOA has nonprofit intent, it still has to file a tax return, has to file a Form 1120H or file 1120 every year. But even though HOAs do have to file tax returns, they typically don't owe much tax, if any at all. In fact, the IRS does give HOAs a preferred status where they allow them to exempt any income as it relates to the HOA function itself. The IRS will only subject the HOA to taxes when they have what's considered non-exempt income. And this is income like fees for a clubhouse, golf course, laundry machines, vending machines, things like that. The IRS will subject that income to taxation, but they will allow the HOA to offset it with other expenses that they might incur. So again, even though they have a filing requirement, typically not going to owe much in the way of tax. Once an HOA does determine that they have a filing requirement, they need to analyze any state filing issues and determine whether or not they need to file Form 1120H or file Form 1120. 1120H is filed by probably 90% of associations out there that we deal with. Very simple form, relatively straightforward. We in fact find that the state tax returns are much more complex, but certainly each association has to do its own analysis on which forms need to be filed and communicate that and coordinate that with the accountant or tax professional to make sure they get them filed on a timely basis. But at the end of the day, remember there's one simple rule. HOAs and condo associations do have to file tax returns, so make sure you review your situation with your accountant.